Hello, everyone. Welcome to the Decentralized News Podcast, where we report on the major events affecting the crypto economy. I'm your host, Piter, joined as always by Ozzy. How you doing today?
I'm doing great.
Right on. All right, let's jump right into our educational and entertaining content. Please do your own research.
And
Okay,
like and
so
subscribe to this video.
viewer,
We're gonna be doing a lot more coming back, and we've even got maybe some Polygon stuff that we've talked about doing, niching down a little bit. Stick around if you enjoy what you hear and enjoy our discussion.
all right, so let's get into the market. So it's down today. We're down 3%. We're below 60,000. It was popping up a little bit over the weekend. We can look at this headline as maybe what was happening because there was also volatility in the Trump-Harris PolyMarket. So it had widened to about 8 to 10 points, somewhere around there. And then briefly it tied over the weekend. And now we're back to a 3 or 4 point spread. I've mentioned this before. I think the market cycle top will be greatly affected by just who wins this election. And it's close. You know what I mean? Harris had a lot of momentum. She is really a status quo type of candidate. And there's no reason to think we won't get similar stance towards crypto. Seems pro CBDC. It's like what you're voting on is CBDC versus no CBDC. I don't know. How do you see it?
I think there's a little bit more to it, but yeah, her platform came out and there was no mention of crypto or Bitcoin, which almost in some way I'm a little bit happy about, because Biden was really running on anti-crypto, anti-Bitcoin.
So there's still room for her to change.
There's basically, if she just plays neutral at the very least, it means she's not pushing the anti-position anymore. Because
My gut feeling is she'll stay neutral through the election because it's not a winning topic to go anti. But yeah, I'd be surprised to see a major shift in their policy approach without being forced into it, without being really pressured into it. Maybe by market participants, by new donations. Like we're a powerful group, right?
Yeah, I think there's still plenty of room to change your mind. And I don't even necessarily know if it's Harris's mind or DNC's mind that you've got to be that they're really trying to change. So like, D might have just too many donors with deep pockets right now that are a little bit anti crypto, so Kamala can't be speaking pro. And I don't know what her stance is. No one really knows where she stands. So for me, it's like you're either betting on the unknown or betting on someone that's.
And they had some sort of crypto summit, but nothing came out of it where it's okay. Now we know where she stands.
I think that's the interesting thing, is that we don't know where she stands, and maybe she had that crypto summit in an attempt to try and build consensus towards maybe a better position on crypto. Because I wonder if Biden wasn't willing to shift on crypto at all. And on top of the fact that he was being called Sleepy Joe, he was very clearly showing the effects of the stage of his age. Maybe he wasn't willing to budge at all, and then Kamala's a bit more flexible, but the DNC doesn't want to go too far to the other side because they've got Jamie Dimon and some of the other big, maybe bank and type donators that don't want a big pro-Bitcoin stance or pro-crypto stance right now.
So Harris has momentum, lost it, but getting it back a little bit. That's the ebb and flow right now. One of the things that happened, there were some stories came out in kind of mainstream media, which is always accused of being left and just supporting Harris 100%. There were a couple of articles that suggested a chink in the armor there, some negative-ish articles. So I think that's what people are getting excited about. We'll see what comes of that. The other kind of major fun in terms of... Oh, go ahead.
I'm going to add to that just because I saw a tweet from PolyMarkets just a couple hours ago. They tweeted, while Kamala is leading in the overall vote right now in terms of who people think will win, down at the state level, two key swing states, I think it's Georgia and Ohio, or I know it's Ohio for sure, but
Georgia's an important one. I know that.
Yeah,
Ohio always seems to be too. I'm not sure the details though.
Yeah, I believe it's Georgia and Ohio are two of the swing states in play. We're still being held by at least, I think it was 6 points by Trump, and between 4 and 6 points by Trump on PolyMarkets. So that was
in the States, it does come down to electoral votes and a state by state competition. And this is so the big cities on the coast don't like overrepresent because they have really high populations. It's like a check and balance in the system. It's controversial at this point, especially when the DNC loses. But it's important to note that these poly market polls can be wrong. They're not an end all be all. In fact, US residents without using a VPN cannot even vote on it. So there's a lot of non-US people betting on this. It's not allowed in the United States without a VPN.
Yeah,
and they've been wrong.
That's just a security measure. That's so that they can't be sued, essentially.
I understand, but it probably keeps a lot of people away. It's just and then also they've been very wrong in the past. So it wasn't PolyMarket, but there was a betting website and it had Hillary Clinton beating Trump like 82% or something like that. And then there was an example in France recently too, where the betting markets were one-sided and it went the other way. So certainly not an end all be all. So important to remember that.
Yeah.
But we can get in kind of the other FUD that I was like, okay, the markets are down. Where's the FUD? Because I see a lot of adoption stories, something like that. And the other one was this whole MTGOX story. So just a bit of an update. On 8/13, a wallet that received 2.19 billion of the Bitcoin from MTGOX out of about 9 billion total. So a big chunk had a test transaction. So this wallet is assumed to be BitGo at this point. I think it's been confirmed, but don't quote me on that. And it's the fifth and final exchange working with MTGOX trustees to distribute funds. So there's already been these examples from blockchain investigators that transactions are happening. So we're getting close to this kind of being washed out of the market, whatever it's going to be. I'm looking forward to that.
Oh, actually, there's been another FUD story, and when you're talking about exchange and it just triggered that in my mind. Swan Bitcoin, which was a Bitcoin-only purchasing platform, has been seemingly in trouble in the last, I think it's been the last few weeks. There's been kind of stories about them looking like they're heading towards a collapse. I don't have all of the details on it. I got a text from a buddy that's really into uses Swan Bitcoin for regular DCA and telling us if you're using it, stop, move your Bitcoin. And I've seen a few stories about like timelines on when they could potentially be starting to run into issues at Swan. And
that would be a big story. Yeah, you're right. If that happened, that would certainly affect the market.
Yeah. So that was something that I saw as well.
We'll have to dig into that a little more for next week. See if there's anything to it.
Yeah, absolutely. I just saw it and I just remembered it and I thought worth mentioning for those that do use Swan.
All right, let's get into some of the positive news. You want to kick us off?
Yeah, I'll kick us off because the reality is there's actually a lot more positive stories than there are negative, and that kind of shows that we're still in the early bull. If you think about the bear market, after FTX, there weren't that many real FUD stories that were left, and bullish stories didn't really pump the market. They weren't having a big effect. Generally speaking, the ETFs are a bit of a kind of outsized kind of element. They did move the markets quite a bit, but
kind of like a gold swan.
Yeah, exactly. I was trying to think of the right analogy, but yeah, they were gold swan rather than a black swan, and probably the reason why we had new all-time highs this past year, because otherwise we probably would have rallied with the Bitcoin cycle as per normal, but not to the extent that we have. That being said, we've got the National Pension Service has bought nearly $34 million worth of MicroStrategy shares. So this is the third largest pension fund in the US or potentially worldwide. I'm not 100% sure.
I think it's I think they're out of South Korea, this pension fund. So I do believe it's a worldwide stat. But
yeah, I wasn't 100% sure, but they bought $34 million worth of MicroStrategy shares. And the one thing, if you're really into crypto and especially into Bitcoin, then MicroStrategy is the largest institutional holder of Bitcoin. I don't know much else about their business model outside of they buy Bitcoin and hodl Bitcoin, and they've got loans against the Bitcoin that they bought so that they can buy more Bitcoin.
And they have a very hardcore stance, very straightforward.
Yeah, that's it. Basically, buy and hold
as much Bitcoin as possible. Buy the top forever.
Exactly. Buy every dip It's quite wild.
But it's seen as like a way to invest into Bitcoin if you can only buy like approved stocks, so like for pension funds or. And the next story with the central banks owning it. It's like we can't assume to know that they're buying it for these reasons, but it's like a way to get exposure to Bitcoin if you're not allowed to buy the ETFs yet. And the ETFs are new, so before you couldn't. So this is why MicroStrategy was seen as that, but it's still apparently seen as that.
Yeah, it makes total sense because as I said, I really don't know anything about MicroStrategy's business model outside of buying Bitcoin, and I don't know if they really do have any kind of big business outside of Bitcoin at this point in time.
Basically, they do have revenue coming in from their business that they can use. Yeah. So this gives them their leverage is just revenue. They do have revenue coming in.
Yeah, they're purchasing, like, MicroStrategy's stock price is very often tied directly to Bitcoin, and so this is a pretty interesting thing. We both have the National Pension Service out of South Korea, and then the Norwegian and Swiss central banks both buying Bitcoin MicroStrategy shares. I almost just said Bitcoin because in reality it's the same thing in my mind, and this is a pretty big move. The National Pension Service buy is quite large, while the Norwegian and Swiss central banks bought between 1.1 and 500,000 shares each. So that's still sizable buys, but
it is. And it's just interesting to see central banks owning it. And talk about this a little.
I've got to correct myself. The Norwegian buy is larger than the national pension in terms of dollar amount, because MicroStrategy is trading at about $135 right now and 50 cents. So their buy would be $135 million if at minimum.
Yeah, no, we talked about this a little bit, but it's like traffic coming in the back door. You know what I mean? Like they still have to, and it just with the Bitcoin ETF, there's still adoption and room to grow there. It looks like.
Oh yeah, and the reality is there. If we look at the ETH ETF, we don't really have much on it in today's show, but it's even newer than the Bitcoin one, and there isn't even a way for some of these big holders to get big institutions to get access to it through a backdoor. And once it reaches that kind of point, if we look at the gold ETF, was like it had a decent up, but didn't really take off till a year or even 2 years after it really came out. And that's because ETFs and a lot of these major players they can't buy a stock or an ETF that is less than XYZ years old.
Yeah, they have to do their due diligence. They have to take a look at it seriously. And we're talking about large pools of money.
Yeah, we're not talking about hundreds of millions of dollars. We're talking about
they have their approval processes, and
we're talking about hundreds of billions of dollars that are held by these institutions.
Yeah, exciting.
Yeah, to see these MicroStrategy buys is pretty exciting, because a central bank buying stocks that are not from their own country, that's wild. Like a pension service, I see that you buy, like you're buying for performance to try and make sure your pension's well funded. But to see central banks doing this, and this is even after there was a big petition in Switzerland to try and get the Swiss central bank to start buying Bitcoin. So is this a direct response, or is this maybe they're a way to slowly appease the masses without saying that they're buying Bitcoin directly?
We have some more exciting news out of Dubai, which always seems to be in the news when it comes to crypto. But there was a really interesting court case. So the Dubai court, first instance, has recognized the payment of salaries in cryptocurrency under employment contracts, marking a significant shift for the United Arab Emirates, where Dubai is, in their legal approach to cryptocurrency. So this was a 2024 ruling. It contrasts with a 2023 decision where a similar claim was rejected due to the lack of clear valuation of cryptocurrencies. The case arose when employees sued for unpaid wages that included about 5,000 EcoWatt tokens, which I've never heard of, but they weren't paid. The ruling validated cryptocurrency as a legitimate form of payment. So we'll see how this overall, but seems like an important precedent moving forward in a positive story.
It's an interesting to see just a reversal of that decision in Dubai. And
EcoWatt pumped, by the way. No, I have no idea.
I have absolutely no clue what EcoWatt is. And just looking at, we do have examples of people being paid in cryptocurrency in the US. There's an NFL player who took Bitcoin as part of his salary. There's a few other examples of some big stars doing that. So to see that kind of right and everything protected in court is pretty interesting.
Yeah, and in Dubai you have a lot of projects and stuff, a lot of stuff going on, a lot of conferences. So people go to speak or they are working over there and they want to take part of their payment in crypto. Now they can. It sounds cool.
Yeah, it sounds really cool. It definitely sounds like there's starting to be a legal framework for crypto just as a currency around the world. So that's pretty interesting. And MetaMask is taking that to the next level with MetaMask rolling out its own crypto card with MasterCard. So this is not your first blockchain-based debit card. We've had BlockFi, Crypto.com. Many central exchanges have had their own debit cards, but this one's really on the blockchain, and it uses crypto payment specialist banks as well as MasterCard to enable people to make purchases directly with their USDC, USDT, or wrapped ETH assets held on Linea. So MetaMask trying to build up, kind of boost their own product and its TVL with this card. It's right now, it's in a pilot phase, open to only a few thousand users in the EU, but there's plans to broaden that distribution later this year with a full rollout in the EU and the UK in coming quarters. So not really available in the US yet, but...
But while this is a pilot program, just the fact that you can, and it's on Linea, it's all these little things, it's just in the UK for now, all that. And we've seen stories from bank cards and stuff like that, adoption. But when I talk to people, let's say in my family that will still, they're not into crypto, just don't understand it. Just, what are you doing? One of the arguments that they have is you can't spend it every day. You know what I mean? As a form of payment. I said, yeah, you're always arguing this is down the line. You know what I mean? Like that kind of adoption will come, but that's like a tangible thing that they can see is, okay, I can use it. You know what I mean? And you can point to stories like this where it's, look, it's adoption, it's coming. It's just not here yet. They're working on it. And this is a great example of it, I think. And also this next story, Flexa has introduced Flexa components, which allows customers to pay at retail point of sales with USDC and other cryptos. It's not a debit card per se. What's the difference? It's similar to Google Pay, right? It will allow customers to pay for purchases with their preferred crypto with their mobile wallet in a way similar to Google Pay. So in terms of the user interface, exactly how it works, I'm not 100% sure. But it supports a wide range of cryptocurrencies, USDC, Bitcoin, Ether, Sol, Litecoin. And in terms of people that have signed up to start participating in it, talking names like Chipotle, Regal Cinemas, I've heard of. They mentioned Mikimoto and 99 Ranch Markets. I've never heard of those, but Chipotle and Regal Cinemas, those are big retail.
Yeah, Chipotle especially, that's a pretty big name. I haven't personally heard of Regal Cinemas, but
just
that's it. It's still something that you can spend your money on, and we've talked about Ferrari and Porsche and all of them. Except
Regal, like movie cinema is more every day. Chipotle is more. These are like more of your micro purchases type of stuff. The movies aren't cheap. My gosh, but still, like you have to buy the ticket, then you got to buy the popcorn. Like it's all broken apart. You know what I mean?
Yeah. Oh yeah. Absolutely.
It might be a matinee because you're cheap like me and you just want to stack more corn.
Yeah. Oh, absolutely. So I think we're seeing all of that kind of level of adoption and just ease of use that wasn't really there last cycle unless you were using a central exchange, and everyone saw how that went. We're seeing more and more things around blockchain tech and even people trying to find backdoor ways to buy crypto and hold it as an institution. So that's pretty awesome. I think the other big FUD that we need to talk about is the macro. It's a hard piece to avoid in today's discussions and just in the market. There are people that debate and say we're already in a recession. Others that are saying we're heading into a recession. Data is mixed with GDP data that came out in the US saying growth is great. They're well above expectations. and CPI has come down and came in below expectations, which was also great news. And then unemployment ticking up well above 4% now. And so everyone kind of...
Right, yeah. Unemployment up, inflation down, but it's like, okay, it's in the 2%, but it's like 2.92. Like
it's still not 2%.
Yeah, it's still struggling to move. They always say the last percent is hard, like trying to get to 2%, like is hard, but there's always a lot of pressure to shift. And the market is saying the next 3 meetings there's going to be at least one cut. Oh.
Yeah.
I mean, that should be exciting news and not necessarily FUD for the market, but the past tells us that it's the circumstances around causing the rate cuts that is pushing the market down, and it's still going to go down further, potentially.
That's it. Like the FUD and worries about a recession are what's causing the market to go down, even though there's rate cuts coming from everyone's expectations. Reuters' poll has now suggested that there's going to be 3 rate cuts this year, which means September, November, December, if they're doing 1 cut per meeting, you've got there's your 3 cuts right there.
Like an average. Yeah, maybe they do 2 right away or something crazy, but not crazy, but
a little bit more drastic. Yeah. If we look at the current futures betting market on these cuts, 77% of respondents are saying one cut in September, and only 23% are saying 2 cuts in September.
But still, it's on the table.
Yeah, it's still on the table. Looking right now, the site is not working for me, but there's general consensus that we're seeing that 3 cuts. And
when I looked a few days ago, the 100% of the market participants were on the side of a rate cut in the next 3 meetings. I was surprised by that. I was like, oh, wow. You know what I mean? But they're always wrong too. You know what I mean? This is a constantly moving target, so it can't, in terms of what it's predicting week to week, so it can't be right. It's always moving. But let's look at what's coming up that's going to affect how it moves. It's still interesting to watch. Last Wednesday, we had those CPI numbers come in, so they were slightly positive. This Wednesday, we get the Fed meeting minutes, and that can move the market sometimes because people are looking for signals and some information that gleans from the meeting minutes.
You get to see a little bit of insight into the discussion that was had.
Like how many people are voting for what thing.
Yeah, exactly. It gives you a bit of an insight on his speech might have been very dovish or very hawkish, but the discussion in the overall meeting might have not been. It might have been more dovish, more hawkish. It gives you a little bit of that inclination.
All the sorcerers come out to read the bones. That's what you're telling me.
Exactly.
So then Jay Powell is going to come out, and the Jackson Hole speech is here again. It's like a mark that we've been through another year of these tough interest rate environment and tough inflation environment. So he's coming out and speaking on Friday. So again, the market will be looking for signals. And then next Friday, we have some PCE inflation numbers coming out. Not like the big headline CPI, but
PCE has been a preferred measure for Jay Powell.
Yeah, CPI gets all the headlines though, for whatever reason.
Yeah, it's because it is really called the Consumer Price Index, whereas I forget exactly what the PCE stands for, but it's a slightly modified measure of CPI. And I know that Jay Powell and the Fed have used that one a little bit more recently. And so we'll be interested to see. We also get a GDP revision for Q2 on the Thursday, the 29th. Okay. So it'll be a little bit interesting to see how all of those align. PCE is right now a little bit closer to 2% than CPI, sitting at about 2.5 to 2.6% year over year, depending on if you look at core or all of PCE. So better, but still not at 2%. So it'll be interesting to watch what happens on the macro scale. And I definitely think that is also playing a part in how everything plays out. Bitcoin usually doesn't do well heading into once the first cuts start. We generally Bitcoin starts doing really well once the last cut has happened. And generally people say that's because there's a lot of fear going into when the first cut happens, and during that period thinking the economy is going to collapse. And then once we make that last cut, or before that last cut, everyone kind of sees that the economy is rebounding and there's more money supply. And so Bitcoin rallies. And the other part to that is Bitcoin almost never does well going into an election. In the kind of summer and usually the September heading into
summer
an
lull,
election.
and then September is historically really not like its worst month. I think it is the worst month for Bitcoin historically. Like even like when it has a green September, they're minuscule.
Yeah, like Bitcoin often falls about 40%, and the whole crypto market generally falls about 40% in the summer heading into an election. In 2020, it was more like 20%, but we'd already fallen about 40% at that point because of the vid dump that happened. And so the rally potentially coming will be very
What are we
interesting.
off of the all-time high? What are we, like 25% off or something?
Yeah, we're somewhere around 25% right now.
So there's certainly like some downside potential. The midterm market's always really hard to predict.
Yeah, and so to me it's okay. And I guess the other big note to make with that is that even though it falls 40%, October is always really green. And
Yeah, I was actually I was listening to Jesse Eckel, and the way he described it, I thought was pretty good. He was like, look, it's winter. This is not winter. It's more like spring. So there's up and down days, some green days. But in order to break through, and we had like early all-time highs, but in order to break through that, you need to recoil in order to push through. I thought it was a good analogy. And I tend to agree just in the sense I'm bullish longer term going into next year, end of this year.
Yeah, and to give you an idea, right now we're probably sitting around 25% down, but if we go back to like early August on our big wick on around August 7th, according to what I'm seeing here, August 6th on my chart, we've already gone down about 33.5%. So if we look at falling somewhere between 20 and 40%, we've technically already hit that low. So Bitcoin might just grind sideways for the next month and a half, and we would still have technically hit that 40% target. We could still go down further, go revisit that 50K area, or maybe even a little bit lower. To give you an idea, 40% from all-time high would be somewhere around 44, 45K. We're talking about another 15K drop essentially on Bitcoin. But considering the fact that would still be we would still be a 3x up from the bottom, that's a pretty healthy spot to be.
All right, let's round this up. Let's hit the speed run. Yeah, there's some cool stuff in here. I'm going to skip one of these because I wanted to talk to you about this one, but because I was interested in it, because you did a lot of airdrop farming. But I completely stayed away from it just because bandwidth, and I was just worried about screwing it up and like getting my wallet strained and stuff like that. Like I just couldn't pay close enough attention to it, basically. But Kelp DAO launched Gain, a one-click airdrop farming product. So with Gain, you can automatically farm several layer 2s and restaking airdrops. I thought this was pretty intriguing. It seems like someone who's really passive but has a decent amount to invest. If they feel like this is safe, do your own research. I don't know anything about it. I'm not necessarily planning to get involved, but I thought it was intriguing. I wish it started earlier.
Yeah, but the whole thing, the airdrop market isn't great right now. Yeah, and even if it came out before ZK Sync and Layer 0, for example, or even Eigenlayer, those airdrops, unless you were doing really specific things, did not pay out particularly well to anybody. So it might not have made much of a difference in the long run for all of those people. It's an interesting product, and I can see how it probably fits into what they're doing in terms of restaking and staking. I'll be interested. I might go check it out a little bit just to see what it's about.
Yeah, it seems to add another layer of like where a fail could happen. So one of these restaking that they're putting in could fail, and now Kelp could possibly fail on top of that. It's just like another layer of risk. So anyway, yeah, do your own research, but it's still an interesting product. Let's see, a little more fun, or just another fun one. Record drop in Ethereum gas. So Ethereum gas plummeted to a 5-year low earlier this week. And as an example analysis, Ryan Lee suggests the historic data shows a correlation between low gas fees and a subsequent increase in ETH price. So these super low gas fees have some people excited about the potential that it implies.
Yeah, I think there's it's worthwhile being excited about that. We hit pretty terribly low gas fees just before the like just after the FTX bottom, really. And then ETH went on a run from $800 to just shy of 4,000 or 4,500. That makes a lot of sense. And if you look at ETH prices right now, we're sitting at 2,600 right now. So it feels like we're hitting a similar kind of bottom type sentiment that would make a lot of sense for ETH to run from here. And the fact that it's the lowest in 5 years, that it's lower than when FTX happened, that doesn't actually surprise me or concern me very much, because if you look at the Dune dashboard in the article, gas fees have been trending and hitting lower highs for the last 4 years. A considerable higher low, higher low, higher low. And that's because L2s are making it that much easier and that much cheaper to interact with Ethereum. And so lower lows and lower highs.
Oh, lower highs. Okay. Sorry.
Yeah, sorry. We're hitting both in terms of we're seeing lower lows in terms of gas fees, and we're seeing lower highs in terms of gas fees.
Lower highs. Okay.
And so that shows that Decen's worked. The move to proof of stake has worked, and L2s are working. If you're not into ETH and you don't believe in the ETH vision, people will argue that it's because people are going to Sol and other chains, but I don't necessarily.
Isn't there a little bit of a danger in the sense that if they don't make enough money off the gas fees, ETH becomes inflationary? Isn't that the thing?
There's a mild fear, but ETH would have to be like there isn't any talk in this article that ETH has gone reinflationary, and ETH fees are ridiculously low. Sentiment is
I would
ridiculous.
imagine it is, but who knows? But like the hope is that eventually all these layer 2s, there'll be enough gas fee. Like the overall market will just grow so much. But in the short term, there's a little bit of FUD in that it reduces the revenue for the main chain, the chain of chains.
Yeah, absolutely. There's definitely some fees.
Like it's working, but at the same time, did they not foresee this like hurdle they got to get over?
I think they foresaw this. Like I think this is,
but it might be a bigger hurdle than they imagined.
I honestly, Vitalik and the guys that are behind Ethereum are really smart in my mind. I think they probably imagined that this would happen. It was almost immediately deflationary when we launched proof of stake and the burn, and then they've slowly made it harder on themselves to collect more fees. And I think the reality is they know that the market's turning around right around the corner, and they don't want it to burn to nothingness. And so you just hitting that right equilibrium point is all that matters. And so you need some of these low periods to help reignite some supply and add some supply back to the system, so that when we start pumping and gas fees are back at $100, hopefully not. I don't want that.
They just get a lot more $5 ones.
Yeah.
They just need volume on the lower ones. Yeah.
Exactly. You get volume and print a little bit when it's low, and then when it's high, you're burning way too much, and so you compensate by having low periods again. It's a good boundary system, and why the supply of Ethereum isn't fixed. And all right.
This is a speed run, dude. Let's go.
Okay. One thing that everyone's talking about, and that's Tron and MemeCoins. One of the things why people say Ethereum's is not doing well. MemeCoins going crazy on Solana, but Tron's trying to get its day. They announced $10 million fund in granting to any MemeCoins that graduate from Sun Pump, which is the pump fund of Tron.
The Sun Pump, which will pump Sun.
Yeah, exactly. And so
Pump the Tron founders.
Yeah, Justin Sun is the Tron founder, so Sun Pump is basically Pump Fun, but calling out Justin Sun. And there's been more than 1,000 meme coins that have been created daily on Tron.
How many rugs?
98% probably, or 99.9%.
Not an official stat.
Yeah, not an official stat, but there's been tons of meme coins launching, trying to get that $10 million. But from what we can see, most people are just taking advantage of that liquidity, just like we're seeing on Solana. It makes sense at this stage in the market. That being said, last couple pieces of speedrun news.
I'll do the Celsius one. So Celsius sued Tether. I was like, what happened here? All right. So Celsius accused Tether of wrongdoings in a 2022 agreement where Tether provided UST to Celsius against BTC collateral. Okay, that's like gobbledygook. But anyway, Tether is just called this a shakedown. And they're saying that, like, look, Celsius is just trying to shift blame of their financial mismanagement. So the way they described it is this: when the price of BTC dropped, Celsius refused to provide the additional collateral required by the agreement. Tether then liquidated the BTC collateral as per the agreement that Celsius failed to meet. So they're just saying, like, they're just trying to shift the blame on us, going nowhere. But anyway, big lawsuit. Those guys are infighting. Did you hear about this Optimism Superchain?
Yeah, they're talking
sounds like they're trying to compete with the Ag Layer. It honestly sounds cooler than Ag Layer Superchain, but I like the tech of the Ag Layer better.
Yeah, they've talked about plans to unify the Superchain L2s with an interoperability layer to basically create seamless cross-chain transfers. This very much follows Polygon's vision, and there was actually a great X Space this past Friday on the QuickSwap Twitter, where the CEO of Polygon explained why this move actually is garbage, doesn't make a lot of sense. And for Optimism, if you're big bullish on Optimism, this is exciting because it's unifying Optimism and Base, which is their big argument. There are other optimistic L2s, but not nearly as many as chains on using the Polygon CDK and the Ag Layer. So
I guess, like, just to break it down really simply, because in terms of the tech, I don't understand 100%, but you have optimistic rollups and you have zero knowledge proof as a way. Those are like the two competing ideas that I see here. We're like with Optimism as a representative of that and Polygon as a representative of the ZK version.
Yeah, it's definitely more than that, but that's a simplified version. The other thing is that Polygon, there's a lot more freedom for chains in terms of how they plug in to the CDK and the Ag Layer compared to Optimism, which seems fairly like you need to be using their Superchain and things like that. And they're talking about seamless cross-chain transfers, but they are also still talking about like transfers across L2s. And so when you look at the Ag Layer and Polygon, that's much closer around the corner, potentially end of this year, where we do have the pool to Matic migration that's happening, the Matic to pool migration that's happening in 2 weeks. Polygon
that just kind of sets the base for the Ag Layer to happen. It's not like
Ag Layer.
It's like the thing, now we can build it.
Oh, they've already been building it. The CDK is at a pretty high level of completion, but there's a look that we're probably seeing something towards the end of this year.
Or maybe the better way to put it is now we can use it. We'll start to see the fruits of the labor, so to speak. Like the way I imagine it is like a canal system, and it's just like starting to open up. Like we have all these pools of liquidity that are totally separated, and if someone can actually come up with the tech to unify it, it could, like bringing irrigation to farming, you could really grow the space. You
Absolutely.
know what I mean?
And what's very exciting is Polygon's already got a ton of chains that have committed that are either using the CDK or are planning to use the CDK. Tron is one of them. So the Telegram network, IMX, Immutable X, Ronin, which hosts the
gaming.
Yeah, Axe Infinity and a whole bunch of other gaming. So 2 big gaming chains, Telegram and a whole bunch of others. And so we're seeing a huge number of chains. I think the goal is to get 50 chains on the CDK by the end of this year. We'll see if they hit that, but we've definitely got some big name chains already using or planning to implement the tech for Ag Layer as soon as it's available.
That was the longest speed run ever. That was awesome, but it was fun. There was good stories, and I gave you a hard time on that one, but I'm the one who like asked the question to expand on it.
Yeah, that's it. It was a long speed run, but in one way or another, some of these stories were not really speed run stories. We invite everybody to like and subscribe to the video. We're here for your not financial advice and the education and entertainment content that you deserve, and we hope you enjoy. And we want to thank you all for joining us, and we look forward to seeing you next week. See you next time, and thanks for watching.
Thanks, everybody.